Hey guys, it's Kevin Patrick over at First Coast Trust. We've been fielding a large amount of calls as to whether you should lock or not lock your loan, especially with the Fed meeting tomorrow. And so I wanted to get this out to all of our commercial and residential prospects, as well as all of our residential and commercial brokers, in an effort to serve my clients the best way possible. There is significant debate about a possible change to the short-term key interest rates at the meeting tomorrow. However, the general consensus is that the Fed will cut rates for the first time since 2003. There is also a great debate about how much of a rate cut is coming. Many analysts are calling for a half-point decline at this meeting, or at least a quarter-point decline over the next two meetings. I, however, am not so sure that the Fed will lower the Fed funds rate at this meeting. My data is showing that there's maybe a 30% chance of this happening and a very little possibility of a half-point cut, but Mr. Bernanke and friends have little interest in my thoughts or our thoughts. I suspect that if they leave rates unchanged, the financial markets are going to be disappointed and will tank, leading to short-term lower mortgage interest rates. A quarter-point move will also be somewhat of a disappointment and could also lead to weakness in stocks. The wild card is that regardless of how the markets react to the Fed move in its post-meeting statement, if we see significant weakness in stocks, the bond market may benefit as a safe haven from this volatility, leading to lower mortgage rates. However, I have to tell you that this is much too speculative to bet that way with mortgage rates. There's just no way to predict an emotional response from the markets. So accordingly, I have to strongly recommend go ahead and locking if you have a loan closing in 60 days or less. Overall today, I am expecting some pressure in bonds as investors prepare for tomorrow's data in the Fed meeting. I am not, however, in total agreement with what most of the analysts and market participants are predicting will happen tomorrow. Therefore, I'm holding on my lock recommendations for the time being, and please proceed cautiously if you're still going to float in this interest rate environment. This will likely be one of those key weeks in the mortgage market, and so I would suggest that if you're a moderate to aggressive person, at least lock with a one-time float down option so that you can lock in the potential that A, the mortgage rates are going to drop or could drop, but in case this data doesn't come through like I'm predicting, at least you're hedging yourself against any exposure that you could expose yourself to. I hope this information helps. If you have any questions, feel free to call us at 904-493-8600, or you can always email me any questions that you have. Again, I hope this helps you, and it's another way to help serve our clients.